Hey guys, it is Julie here with TipRanks, and today we're looking at 3 stocks that score a perfect 10 out of 10. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Today we're looking at 3 stocks that currently score a perfect 10. Of course, I am talking about their TipRanks Smart Score. Now this is a unique measure of a stock's potential to outperform the overall market based on 8 different factors. Of course, you can see any stock's Smart Score right on their stock page, but we can also head over to Ideas to the top Smart Score stock section. This will give us companies that are currently scoring that outperform rating. Today we're looking at medium to mega market caps, and I want them to have a top score for at least a minimum of 2 weeks or longer. So we're going to take a closer look at 3 of these top Smart Score stocks, what it is that these companies do, and of course how the analysts are weighing in on the stock's future. You can follow along over on the TipRanks website, plus don't forget to download the TipRanks mobile app so you can access the wisdom of thousands of analysts on the go. Links will be in the description down below. Now let's get right into these top Smart Score stocks. First up, we have AerCap Holdings. Trading under the ticker AER, their stock is priced at $66 per share. They've seen impressive growth of 59% over this past year and have climbed 16% in the last 3 months. On the right, we can see that 10 out of 10 outperform rating based on some increased hedge fund activity, with hedge funds increasing by almost 800,000 shares last quarter, plus positive crowd wisdom with an increase of 5% over the last 30 days, and bullish blogger sentiment. AerCap Holdings is involved in aircraft leasing and aviation finance. They acquire new or used commercial aircrafts and lend them to their clients via operating leases. The firm also provides aircraft owners, financiers, and investors with asset services to manage an aircraft portfolio. With about $70 billion of total assets, the company has over 1,700 aircraft, and they are the world's largest owner of commercial aircraft and largest 787 owner. Their next earnings report is coming out at the end of the month on July 31st, and this follows last quarter where they had a solid earnings beat. For their first quarter, they reported revenue of $1.83 billion and earnings per share of $2.34, coming in 37 cents ahead of analysts' expectations. The company also affirmed their full-year guidance, saying that this earnings reflected the ongoing normalization of air travel and a return to business as usual for the aviation leasing industry. Their stock has attracted 6 buy ratings from Wall Street. And that unanimous strong buy rating comes with an average price target of $74, and that would be an upside of over 12% from current prices. The most recent rating came in just today from Bank of America at $75, which would be an upside of 14%. Most of the remainder are a few months old and was closer to that last earnings report, so I'm sure we'll see many upgrade their ratings following at the end of this month. Our second 10 out of 10 stock is Honeywell International. Their stock trades under the ticker HON, currently priced at $204 per share. They saw massive growth here at the end of 2022, and overall for the year are up 22%, climbing nearly 5% in the last few months. They score a 10 out of 10 here based on a strong buy consensus from analysts, increased hedge fund activity, and positive news sentiment. Honeywell International is a behemoth of an industrial conglomerate. They're involved in a wide range of industries, including aerospace and travel, building technologies, energy, healthcare, life sciences, logistics and warehouses, retail, and utilities. Their vast product lineup involves things like access control and control panels, electrical and wiring, air and thermal systems, directed energy. The list goes on and on. These guys are involved in a ton of stuff. Their Q2 earnings report will be coming up on July 27th, and once again, they're following another earnings beat. At the end of April, they came out with Q1 earnings per share of $2.07, beating analysts' expectations. Sales of $8.9 billion grew 6%, and the company also raised their midpoint full-year adjusted earnings per share guidance by 13 cents. Their stock is currently rated a strong buy based on 10 analyst ratings, with 8 buys and 2 holds. The average price for the stock comes in at $231 for an upside potential of 13%. The most recent rating came in 8 days ago from Barclays with an upside of 11.5%, and then we do have our hold ratings on the low end with an upside of 2 and one price target with an upside of 29% on the high end. And third, we have a stock that has been soaring lately with Delta Airlines. Their stock trades under the ticker DAL, priced just shy of $48 per share. Now, their stock really took off here in the spring, currently up 53% over the past year and 35% in the last few months. Their 10 out of 10 stock score here comes with some insider buying shares, an increase in hedge fund activities, which has gone up by 1.3 million shares in the last quarter, and positive crowd wisdom and new sentiment. Of course, Delta Airlines is one of the major airline companies here in the United States. The company employs over 75,000 people, flying nearly 200 million travelers every year up to 275 destinations across 50 countries. The company has been benefiting as they say that pent-up demand for air travel has not yet been satisfied, and they continue to see that demand return. And we're seeing that demand reflect in the company's earnings, as their last report came out on July 13th, where they had a solid earnings beat. For their Q2, they delivered earnings per share of $2.68, coming in 28 cents ahead of analyst expectations. In fact, they delivered their highest quarterly revenue and profitability in Delta's history. They also increased their full-year earnings per share outlook as well. And Wall Street seemed to be impressed following this earnings report. The Delta Airlines stock currently comes in as a unanimous strong buy with 16 current ratings. With an average price target of over $59 per share, that would be a potential upside of 24% from current prices. And we can see a ton coming in the last couple of weeks following that earnings report, basically all in the double digits. We do have one low-end rating here around 5%, but many ranging from 11 all the way up to 61% upside. So that is a quick look at 3 stocks, scoring a 10 out of 10 on the TipRanks Smart Score and also having a strong buy rating from analysts. Let me know of your thoughts on these 3 companies in the comments down below. I always love hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what those Wall Street analysts are looking at and providing some information and entertainment. Always do your own research and due diligence. Thanks so much for watching. I hope you have a fantastic day, and I'll see you back here next time.